Good afternoon, everyone. This is Henry Gambell with simplertrading.com, and in tonight's free video, I wanted to look at an idea that, to be very clear, is not going to be for everyone, and to try and short a chart like Apple may be looked at as being kind of crazy, right? Because it has been so incredibly strong, and I have not been trading Apple at all really in the past several months, but I bring it to you tonight because I think it's going to be worth considering into Tuesday of next week. Now on Tuesday, after the market closes, Apple will be reporting their quarterly earnings, and this is where the opportunity is going to come from, and I want to show you a unique way to try and trade this. So one of my favorite strategies around earnings is to look at an unbalanced butterfly. Now, these prices are going off of Friday's close, so I would evaluate this idea on Tuesday afternoon, and it will depend exactly where we are trading as to which strikes you put on, but I would have you entertain something like an unbalanced butterfly. With this type of a strategy, it's very similar to a butterfly in that you are using 3 different strikes. What is unique about them is the way that you set up the individual, the number of contracts inside of this. You can see that there is the heaviest weighting on the body, where for this discussion, I've centered that around the $345 call. And to just get to the guts of what this means is that in a trade like this, your maximum profit is going to be achieved at $345. So that means that if Apple rallies $25 from where we are right now, this trade will make its maximum amount of money, and that's going to be $520. Now what's unique about it is that if anything happens to the downside, and this is why this trade can be so forgiving, because if you look at this and say, this has run so far, I think it's going to drop, you can still put this trade on. If Apple drops in a big way after the report, you're only going to make $20. So it's not as big of a payday, but the thing is, the most favorable is that break-even point, which will come in above $345. So Apple could rally $25 and you would make this. If it were to fall, you could take in a smaller credit. It's just very forgiving. Now, if you do see Apple get above 350, then it's worth pointing out that this trade would have $4.80 of risk. So, you're getting just a little bit better than a 1-to-1 risk-reward ratio. You're doing it in a very unique way that offers no downside risk and a very forgiving break-even point. And I think for those of you that might be willing to consider somewhat of a contrarian trade, or just the idea that we don't explode another 25 points higher, this could be a good strategy to put to work for that report. So I hope that's helpful. You guys have a great weekend, and we'll see where all this comes up after next week.